Hello everyone. Let's discuss the story of Zomato and can it continue giving us multi-bagger returns or it is just a bubble that is waiting to get burst with the IPO of Swiggy. To start our case study, let's deep dive into the fundamentals of Zomato. Zomato operates through four key verticals with food delivery and quick commerce contributing 63% and 24% respectively to its revenues. Going out and B2B supplies are growth verticals for Zomato that can potentially help them expand in future. Discussing each of the verticals in detail. We start with food delivery business. This industry witnessed the influx of multiple players like Uber Eats, Food Panda, Ola Cafe, etc. But over time, only two players were able to survive, and that are Zomato and Swiggy. Zomato is the market leader today and it is constantly expanding its network by increasing its restaurant and delivery partners. Zomato recently became profitable in quarter 2 of 2023 and has remained profitable since then. In fact, it has also increased its adjusted EBITDA as a percentage of gross order value from 0% to 3.3% as of the latest quarter. The efficiency in Zomato's operations has been constantly improving, and therefore, we see consistent increase in the annual transacting customers and order frequency. Moving on to the next vertical, that is quick commerce. Zomato acquired Blinkit a couple of years ago, and it was heavily criticized by its investors for this move. Even Zomato's stock price plummeted post this acquisition. But cut to today, Blinkit is acting as the growth engine for Zomato and its gross order value is already higher than Zomato's gross order value in some of the cities with overlapping presence. Blinkit has seen 60% year on year growth in their business, and in order to support this trajectory of growth, they are adding more and more stores. In the last year itself, they have added 149 more stores and increased the initial count from 377 in 2023 to 526 in 2024. Blinkit's profitability has consistently improved, mainly due to the operating leverage driven by higher throughput per store. Blinkit turned contribution margin as a percentage of GOV positive in quarter 2 of 2024 and is on a well defined trajectory to turn adjusted EBITDA as a percentage of gross order value positive in the coming quarters. Next vertical of Zomato is going out, which includes dining out and Zomato Live. Dining out helps people discover, reserve, and transact across restaurants in India and UAE. Zomato Live, on the other hand, enables discovery and ticketing of events like food carnivals, music concerts, and other live events in India. Zomato Live recently created a lot of buzz with music concerts like Diljit Dosanjh's Dil Luminati Tour and Feeding India concert with Dua Lipa. These tickets were sold out within minutes. Although going out business is still in its nascent stage, but it presents Zomato with a great opportunity to grow further. The business segment has also shown good performance across different operational parameters. Just to add a recent development with this, Zomato acquired Paytm's entertainment business, which it plans to spin off into a separate going out app called District in the coming few weeks. District will be Zomato's attempt at creating a super brand after the success of its food delivery business and quick commerce venture Blinkit. With this acquisition, Zomato will become the second largest entertainment ticketing platform in the country, behind only the market leader BookMyShow, which until now had an untouched monopoly in this sector. Coming to the last business segment of Zomato, that is business to business supplies. It operates here under the brand name of Hyperpure. It sources goods directly from farmers or traders and supplies it to restaurants or other B2B customers. Hyperpure is working capital intensive business since its inventory is owned by Zomato, but their revenues are constantly increasing given the large B2B opportunity. Before moving ahead, let's quickly look at the shareholding pattern of Zomato. A major chunk of the company is in strong hands, that is, with FIIs and DIIs, which is good. FIIs have reduced some stake in the company from March to June 24, but a large amount of that has been bought by the DIIs, so no need to worry here as well. Now, moving on to the latest developments in the market that can potentially impact all the shareholders of Zomato. Zomato's rival Swiggy has filed for an IPO with SEBI for an estimated 1.2 to 1.4 billion dollars. The IPO might be timed with Diwali festivities in November this year. Swiggy is looking to raise 3,750 crores through fresh issue of shares, and the rest will be raised through an offer for sale. The IPO is expected to be the second largest startup IPO in India, next only to Paytm. Its largest shareholders like Accel, Elevation Capital, Process, and Northwest Venture Partners are selling their stakes. Swiggy is planning to use a portion of IPO proceeds to scale up its quick commerce business by expanding the network of dark stores. So let's finally discuss, does the listing of Swiggy in the public markets hurt the future prospects of Zomato or not? As per the estimates available, the current valuation of Swiggy is just 85,000 crores, while that of Zomato is 2,50,000 crores, which means Zomato is trading at a multiple of 20.6 price to sales, compared to only 7.6 for Swiggy. We have a view that Zomato's valuations looks a bit stretched when compared to that of Swiggy, as both of them operate in similar segments of the market, and even if we compare their 2024 sales data, Zomato is just slightly ahead of Swiggy. We also realize the fact that Zomato is getting a market premium for being a publicly listed company and has turned profitable, but still it does not explain Zomato getting 3 times more valuation than Swiggy. It only leads us to conclude that either Zomato is overvalued or Swiggy is undervalued. Therefore, there are high chances of Swiggy giving very good listing day gains and chances of Zomato correcting in the near term. But do remember that both these stocks operate in a very attractive market and can be good picks from a long term standpoint. If you have stayed with us till now, please do like our video and subscribe to our channel. We are not SEBI registered and are just sharing our research with you. Do not consider this video as a buy or sell recommendation. Thank you, and let's meet again super soon.